Welcome back. You're watching Trade of the Week, and for today's segment, I'm joined by Unum Capital's Loyiso Mpeta for a technical analysis and recap on ADvTECH, Clicks, Growthpoint, Sabvest and Shoprite. Thank you so much for your time, Loyiso. I think it is school holidays already. But one counter that has not taken a holiday is ADvTECH. Yeah. We have seen quite a good growth momentum there on the stock. Of course, diversified private education group. It's in education and also in recruitment. And also they are well diversified within the continent as well in terms of geographies. So let's actually start off with that, because I mean, in a time when consumers are under pressure, and you would think that the education stocks would also be experiencing, especially the private education stocks would be experiencing some pressure. That is not the case, because we are still seeing organic growth there. Yeah, so I think when it comes to the whole discussion again around defensiveness, and I always like to emphasize the difference between the company being defensive versus the stock being defensive. So even if the consumer is under pressure, good parents won't take their kids out of school because they're saying the interest rates are too high or inflation is high. You just reprioritize. Exactly. So from a business perspective, they'll always be a bit defensive. I mean, education is not a negotiable thing, really. I mean, you really want that. So taking a look at how the stock has performed relative to that very good recent results we've seen in ADvTECH. So going back to when we last covered the stock, which was back in early or late 2022, I had seen this previous all-time high at 21 Rand. There was that strong sell-off which bottomed in May 2020, and then the stock was followed by another strong rally. But then there was this period of consolidation, which was the time when we looked at the stock, and there was a bit of concern that I had, because what I had picked up in terms of the price MACD relationship was the MACD had made a new high relative to the previous high, but the stock hadn't. So this is what we call reverse convergence, which is a bearish technical setup, this reverse convergence. But again, as I always emphasize, when you get these technical signals, it's not a foregone conclusion that the stock will capitulate and go through a bear market, but it does give us caution to say more often than not, when we get these technical signals, they're usually followed by retracements or more prolonged consolidation. But as we can see, the stock really just blew out of that consolidation period, and this was also driven by the latest annual results, which were really fantastic. All key metrics up double digits. So going forward, like I say, this is one of those counters that I just can't see momentum slowing down in terms of the fundamentals. And also when you look at the stock historically, besides this 3-year bear market, more often than not, this stock really doesn't give much opportunities for pullbacks for traders and investors to jump in on that pullback. So if you still believe in the valuation of the stock, and I mean, the future for me is crystal clear. It's still my favorite pick in the education sector. Timing this one is going to be very, very difficult. So if you like what you see, I'll just say buy it. Even though it has run pretty hard. Actually, even Anthony Clark the other day did say that ADvTECH is a good counter for, you know, as a long-term investment. All right, well, let's move on to Clicks, talking about defensiveness, because that's another one that is seen to be quite defensive. And Clicks is also one of those stocks, or one of the few stocks, where you are even still seeing good volume growth, even in these times, because a lot of the time these retailers, there's a pressure that they are seeing there on volumes, but Clicks has actually managed, and their margins up, and their beauty businesses are doing well, even after the pandemic. So what are you seeing there? Because this stock is also seen as quite pricey. Yeah, so funny enough, we've never covered Clicks on this segment, because I personally have always looked at Dis-Chem as the one potentially for greater returns and growth in the medium to long term, because I mean, Clicks has been a stalemate or a stalwart of the JSE for decades now. So in terms of
growth potential. You'd expect it to still grow, but not as much as Dis-Chem potentially. So looking at the stock, and the stock has really been defensive. So going back to 2008, which is as far back as my data can go, you can see how strong this uptrend is or has been. But there's always opportunities in clicks where the stock does give pretty good pullbacks, and we can see the most significant corrections. Here we had a 31% correction, a 26% correction, and most recently from this all-time high in April 2022, we had another 29% correction. And from a price and time perspective, this correction has actually been the biggest and the longest from a price time, not from a percentage, but from a price and time perspective. So what does this mean going forward? Well, if we look at historically these last 3 major corrections, they tend to be short-lived. They're not really prolonged. It's not like a year or 2-year bear market. It's always like a few weeks correction, and then the stock resumes the uptrend again. And that's that defensive nature of the stock.
Yeah.
You know, the corrections are very quick and short, and then the stock just continues about its business. And looking at it now, from this bottom here, it does seem as if that uptrend has resumed again, and more likely it looks like the share will be making a new all-time high sooner rather than later. So again, on that perspective, if you like the company still and you believe in the business case still, you won't get a better opportunity to buy looking at historical performance of the share. So again, if you have a long-term view, it's not really a trader stock, it's more of an investor's buy and hold stock.
Yeah.
So at current levels, I think it does present good opportunity.
Would you say that at this point, even though it is a stalwart of the JSE, it still hasn't reached saturation yet in terms of growth?
Well, if you look at the latest results, I think revenue growth was up only 5%, and that has been the case for the last couple of years. Though when you look at it from a gross profit and net profit, it does go into that low double digits, 10-11% growth. So from a top line perspective, I think they are in that saturation space, but from an operational perspective, if they continue to tighten up their costs and become more efficient in their operations, then you can still get those earnings growth, which are more double digit. So one needs to look at it from a both revenue growth perspective as well as from an earnings growth perspective. And I mean, we've touched on this, for example, with a company like Mondi, where I've said the revenue growth has been stagnant, which means the company is not growing. But if operationally it's more efficient, then you can still get good growth in your margin. So it just depends on what you're looking at. Yeah,
I mean, they are still gaining quite a lot of market share as well. So very, very interesting stock there. Let's take a look at property, Growthpoint. And of course, property stocks depend a lot on the macroeconomic environment. We did have Norbert Sassy when the results came out bemoaning a challenging macroeconomic environment where even the forecast was gloomy. Would you say that Growthpoint is one of those counters that are a bellwether for rather where you can assess the state, the health of the economy through that stock?
I would prefer not to. I think when you look at the performance of real estate investment trust on the JSE over the last 3 years, it's really been one of the hardest hit sectors. Even when you look at the dividends that has been paid out, it's I think it's grown by 1.5% or something from the previous year. So it's a sector that has really been under pressure. And looking at it from a technical perspective, just going back to the last time we covered it, also around January this year, there's this big structure which I looked at as a flat pattern, and I was looking at this sell-off from 31.50 as potentially a 5-wave decline. And I emphasized that this sideways movement from March 2020 looks like a triangle, and actually that has played out to be the case. So we had this triangle for wave 4, and now we have this sell-off which seems to have found a bottom at 9 Rand. But whether or not this is the bottom, it's still very early to tell. And there's quite an interesting similarity in terms of the property sector in South Africa, and when you look at the property sector in the US, And again, we're talking about this environment where we are still in a high interest rate environment, which really works against yes, exactly. So until we really start seeing that decrease in interest rates, I think the property sector will remain under pressure.
Yeah, it really is quite interesting. They were talking about a 60% increase in their payment of, interest rates there, but also saying that even if we do get interest rate cuts that are forecast to come as early as March next year, that's going to take a very long time for that to filter through. But would you say that the stock is cheap?
Technically, it looks very, very cheap.
Yeah.
From a valuation perspective, I would say it's probably fairly valued at current levels.
All right. Well, let's take a look at investment holding company Sabvest. I think the last time you touched on this was last year. So there have been many moving parts in terms of Sabvest. One of the things that investors have been looking at is the effect of transaction capital, which is in its portfolio. Of course, they have listed and unlisted entities there. What are you seeing this time around?
Yeah, so very interesting one. So let's do a quick recap on Sabvest. When we last covered it, it was actually in November last year.
Yeah.
And the one thing that I said last year, look, great underlying holdings, great management. I think Chris Seabrook is one of the most well-known CEOs and major shareholders in the JSE space. And I emphasize that this is one stock that hardly ever gives any pullbacks. And again, because of the liquidity challenges, very tightly held. And I emphasized from a discount to NAV perspective, comparing it to its peers, that it's the one counter that really looks to be closing that gap, that discount to NAV. And again, I did throw in a bit of caution when it comes to the volume and the illiquidity of the stock. So we can see that the stock did continue to trade upwards, hit an all-time high of 97.79. And even before the transaction capital saga and everything, the share did start to pull back a bit. And you can see now that you can say that was exacerbated by that transaction capital, but also you can say there was maybe more profit taking and other trading happening in the stock. But when you look at it now, from where it was, it's down almost 40%. And for a stock that historically, since listing, has hardly really ever given any correction, to get a 40% correction is really what I've been looking for. Or anyone who's interested in the stock. So transaction capital aside, if you still believe in the entire investment thesis, the underlying holdings, which are still very good, besides the transaction capital one, then I think this is as good a time or as good an opportunity as you're going to get to buy into the stock if you haven't already been in it and you were waiting for a pullback. This is really one of the, well, this is by far the biggest pullback you've had on the stock. Yeah.
Besides transaction capital, would you say that the resilience of the portfolio at this point, looking at this, I guess, short period of time where it's pulled back so much, that it's the resilience of the portfolio isn't shown in the stock, and that does that also now widen the discount NAV?
So I know they had interim results not too long ago. I haven't really had a deep dive into it. But if you look at the historical closure of that discount to NAV, that NAV shouldn't change significantly in a short space of time, whereas the share price can. So just putting my neck on the line here and guesstimate, I would say that discount to NAV has now widened because of the massive pullback in the share price, which again is an opportunity for investors to jump in at this time because of that greater discount to NAV now. And again, just looking at it from since listing, that gap has been closing significantly. So again, once the transaction capital aspect of it really is discounted,
yeah.
I think we will start to see another strong run in the stock. So I'm still positive when it comes to Sabvest. And again, like I say, I've been waiting for a pullback. Now I've got it.
Okay, so. Lovely, lovely. Well, let's talk about Shoprite, another stock that is deemed as pricey, that is run and run and run. Of course, you get moments where investors are disappointed with the kind of growth numbers that they put out, particularly on revenue. When the stock is that pricey. Also one of those where it's like price for perfection. What does that look like? And could there be opportunities at some point there?
Yeah, so I think the whole discussion around pricey is always going to be relative on what valuation are you looking at. So again, let's just take a look at it from a technical perspective and a quick recap. It's been a while since we looked at Shoprite. So Shoprite had this all-time high just above 281 back in February 2018. Very strong sell-off, bottomed in March 2020, and then the stock has had a very good run since. But I just want to focus on this area here, starting at this peak. So we'll also double up on this and use it as our educational segment, because there's a very significant price pattern which I noticed in Shoprite. And unfortunately, because of the nature of the program, we don't really do updates as frequently as viewers would like. But on actually other platforms where we do share market analysis, the most ideal opportunity would have been to buy in and around that 200 level. But just looking at this phase here where the stock was going sideways. So the technical pattern I want to focus on is the flat pattern, which is an Elliott wave corrective pattern. Now, this pattern is characterized by a three-wave sell-off for wave A, followed by a three-wave advance for wave B, and then a five-wave sell-off for wave C. So applying this simple model to the share price, I see we had wave A, wave B, and then a five-wave sell-off for wave C. So a flat pattern typically occurs in the second or fourth wave of a five-wave advance. So in this context, I'm looking at it as a fourth wave advance. But after that, we had this very strong rally, which also unfolded in five waves. And now, after this three-wave correction, price does look choppy still. So this is where the caution comes in now. And I'm saying, looking at the way this price is unfolding, three waves down, this looks choppy, so it's more of a three-wave up than it is an impulsive move. This could potentially be another flat pattern forming, though of smaller scale. So we could see another five-wave sell-off before we see a resumption of the uptrend. So I'm a bit neutral when it comes to Shoprite from a technical perspective, but I'll be looking at this flat pattern as another potential consolidation before we see more upside in the stock. So I'm a bit on the fence when it comes to Shoprite at current levels.
All right. Well, thank you so much for your time and for your analysis and recap today, Loyiso. Really appreciate it. That was Unum Capital's Loyiso Mpeta with this week's Trade of the Week.